Hello traders, wonderful week to everyone. Vladimir here, and this is the weekly market review and my forecast for the week starting on today, 23rd of April 2017. I'm recording this video not during weekend but on the beginning of the market for one reason, due to the elections in France, of course. We wanted to see how the market opens and what it brings with it in order to be smarter and try to understand what's going on. I cannot say I am smarter now because there are very serious gaps on the market, which of course make it trickier to try and find the setups, but we still will do that, and we will try to prepare the positions the best way we can. So basically, what happened on during weekend? Elections in France, which surprisingly or not, show very tight fight between Le Pen and Macron, and he seems to be leading, and that was more than enough to boost up the euro pairs, mainly the euro dollar, by huge gaps and bring the euro dollar to very serious records of the last few months. Besides that, rumors are saying that Trump is planning some serious tax cut, and which of course will affect the dollar and the market as well, and all that boosted up the majority of the pairs, which started with huge gaps. Now the question is that all, or will that continue, or the gaps to be closed? Now, for example, take a look on the euro dollar, which opened with above 109, and now we are almost 100 points below. So as you can see, that's not a guarantee for nothing. Nothing really is clear and clean as for now. Euro pound started 50 pips above. Okay, take a look on the euro yen, which was also a monster. Where is it? Here we go. Take a look. Okay, 150 pips above, and we are now going down. So as I said, it's not really guarantee for nothing. It was very tricky, of course, not expected. If you were lucky enough to jump in and get that happening, very good for you. It would be smart to cash out at least partial of the profits or protect the rest. But that's not technical, okay? That's that one time can go with you, one time against you. So if you were lucky on that situations, very good. But make sure you don't give all back to the market, okay? And if you were not lucky, or alternatively, if you were playing more conservative and you were waiting for the setups of war, now it might be a good time to get ready to trade some. Now that's what we are doing here. Let's start with going over the setups. The first one to be is the dollar Canadian, which brings us by this cycle, 61.8 is going to be slightly above 135.50, which, by the way, bring us to the top of the daily range. According to the 4-hour chart, it's going to take us exactly to the same place if we really go and make it, right to here. That's going to be a special cycle right here for. So can we still get there? The answer is yes. But what is another solution for that situation is, due to the gap, we now build up two false breaks, one here, one here. We did not get any convergence created right here yet. Okay, that was our low, and we didn't get any real convergences. But what could happen is, after this gap to be closed, this pair might try and go and make the break and try to make the second leg down. So basically something like 1, 2, or keep here some kind of a range, right? So we can, after that, go and play that higher. So we can try to be aggressive here, look for this sell if it really gives us the chance, and if not, and we just break through, we are probably going to above 135.50 to complete this move, and then prepare the ground for some more impressive, serious sell. That will be number one, and that brings me to my favorite, CAD versus the franc, which I want to go invested, of course. And I wanted to do that lower, like around 0.7250, 0.73, but not sure we're gonna get it there, and there is a good chance that we are going to close this candle right here as it is, which again is very logical and of course makes sense. Now if we take a look here, this measurement, we are on 61.8. We have double bottom, we have a bullish divergence forming between the moving averages of the MACD. We have moving average, we have RSI divergence forming as well. And if we go even further and we measure this way around, right, what we will figure out is that we got this kind of duplication here. Now, of course, we cannot celebrate by that. We don't have this level to be measured correctly, since this is 15 candles and this move was 30, and now double bottom, but this is a level that is corresponded together with this one, right? Which means we can look at that level, but of course by ideal we might continue lower and get it right here from where I expect it to be a huge run. So what I would suggest in that case is don't just attack blindly, but if we go above this area, get retrace here and then breakout, then we might be trying this buy. That could pay out really, but really well. Now, another interesting thing is that we are here on the bottom of a special cycle by itself, so definitely that's a great possibility we should follow. And that's something I would be following for investment. That would be ideal if you don't want to play investments. If you just want to setups, then follow the false breaks and higher highs ideas. Now let's take a look on the view of crystal ball. Another supporter for buys. We are below the channel, which means we are supported to go for buys. 23rd is very powerful day statistically, good for today. It might got increased within day or two. We are bouncing from the buy action zone on the 4-hour and the 1-hour chart together, which means we are good to go. So bullish while it holds, as the plan explained. That would be the idea for this pair. Next on the list, which we have, is the Aussie versus the Kiwi pair. I am only after buys here, as I explained on the many times already. Now what could happen here is we are playing here a triple cycle. That could be also double cycle. Okay, that could be triple. That could be double on the 161.8, and that would be double as well. Okay, by itself. It's a very, very powerful zone. We had this divergence providing us the buy opportunity. Now the pair is holding around here. Next question was going to happen, and for that we have two options. Option number one, which would be ideal, we go down here below this area, create a divergence, maybe some kind of trendline breakout, and fly. Option number two is we got stuck in kind of a range, which you can really feel now, and we can really see one false break on the top, one false break on the bottom, maybe few more false breaks dancing around here, and if it holds, boom, and it flies higher right from here. Definitely possible scenario, definitely doable scenario. We have a gap of this week. If it will be closed and holding, it will be a really nice idea to look for the buys here. If we observe here for the buy opportunity, we still have plenty of room to go inside the channel. Okay, but on the 4-hour chart we do have the supportive zone. On the 1-hour chart it's slightly lower. Okay, so right on here based on the 4-hour chart, or slightly lower down to 106.60, or even one low below that, below 106, and we are illegal for the buys. So keep an eye on these two scenarios, which we are getting very, very close for a trigger. Okay, and once it completed, we are after buys. Pound dollar, well, we are after buys here as well for the long run. You remember that. We got the daily breakout here of this triangle or a range, call it whatever you want. It doesn't really matter. It does not make anyone smarter if you know to name a pattern. The question is how you trade it. The ideal way would be, we got this trend line, right? If we can get closer to that area, which would be also the middle of the Bollinger Bands and the supportive zone and the 200 moving average from the daily chart. And on the 4-hour chart, right, we have another trend line, which is this. Well, that would be kind of an action zone here. So if we can really drop down to this area, that's where we will be looking for the buy opportunities. Now, if we measure it this way and the triangle we've had, we can go down to 100 duplication, which is around 127, or by ideal, even down to 126-ish. Where from? We're gonna look for heavy buys, of course, as long as the daily and the 4-hour chart trend lines will actually hold. So we wanted to go down to 127 or even 126 zones. We will need some bullish divergences there, which means we're not going to buy blindly. Okay, we will need to see some bullish divergence developing here or here, same idea, and only after that we will be looking for trendline breakouts or false breaks and momentum will change, and we follow for buys. Looking in terms of days, the best days to go for buys, let's rely on crystal ball. Our channel would be also around 127, 126, and days for buys, we have 23rd, 25th, 28th, so we are in a very good range of dates to look for the buys. So what we will need actually right now is it to complete the down move, to provide us the bullish divergences on lower time frame, and then we are going for the buys. That's the zones. Okay, that's the zone number 1, 127 zone, approximately the 4-hour chart. Then we have the 126-ish, and on the 1-hour chart we don't have the 127, but we do have 126.50 and slightly below 126. So by ideal, we're actually gonna get there. Get relied on these two zones from 4-hour and the 1-hour chart, and get the combos, and boom, attack for buys. By the dates, we're already coming closer to there. Pound yen is another pair I'm looking to go for buy. It started from around 142 almost, and now 150 pips below. Really massive. The pair completed here kind of I don't know how to say it, how to call it even. It's like a special cycle in that place. Okay, very special. So basically what we will need to do is to get this to wave down to this zone and start looking for the buys opportunities right after to continue. Now basically what's happening here is that this special cycle, we would expect it to continue, we would expect it to correct higher. So there is like 1000 pips more to go up, and that's what brings the confidence for the buys. We have the convergence on the daily chart, which means it is build up for buys and for real buys. We have this trend line, which we might go and retest. That's still a possibility, of course. Doesn't matter how deep. We will build only after buys as long as this low really holds. Now we are talking about the 136 zone. Okay, Euro yen is the only one I wouldn't touch. Actually, all the Euro pairs. The only thing I would try to do here is to go short on Euro pound because of the weekly cycle and the situations, you know. But it's kind of tricky here, to be honest. We get only one wave correction of this triple cycle, and I would prefer to play here a bit slower, a bit safer. It looks like wave number 1 here, so it might go into something like this, and boom, one more push where from we would be looking to go for sales. Yeah, there is a bearish hidden divergence for sure, but do we really have setup here, especially after the gaps? No. And that's why I would prefer to see this moving down, one more push towards, I don't know, like 0.8550, 0.86 zone, and from there go to short. Let's rely on crystal ball for dates, for example. We are in a very good zone of the channel. If we go above that, it will be really massive to look for sales. Of course, based on the 4-hour chart, our zones for sales are really further. Currently, it might change during the week, of course. The sell action zones are located higher. We have the zone here So we need to pay attention how it behaves in that place actually. And anyway, the next ones are really higher. So what could happen here, maybe even by ideal, according to crystal ball, according to that situation we got here, is something like that, and push like this, and still to hold this area. Okay, and if it does, we will be looking for a bearish divergence here, and we are after sells, holding this action zone we got from the crystal ball, which helps us to understand what levels we're going to attack from. Aussie-Canadian pair that is well, kind of mirrored itself from this move to this move, ending it up. We have a beautiful divergence here forming. We have the levels as well on the here we go. All right, we get it here. Okay, we got a 61.8. We are on 20 candles here, and we are already in 20 candles here, so it's building up. So we might get this push towards 100 and then I move down, or it's building down already around the 61.8, but it means it has to dance around it a bit more. So we got a one false break actually here. Oh, actually not. No. Do we have divergence in that place? No, there was no divergence triggering down, so we don't. The only false break forming is right here. So there are two ways we are going to deal with this pair right now. The first way is we are going to go down to this area. Then we are going to correct by two waves up, mark a trend line, and break of this trend line could give us the entry, protecting the last high, and try to write down on this double cycle correction. Measure 38.2 of this cycle and you will get your target. If you get a good risk reward, attack it. If not, ignore it. Option number 2, we are going to play a bit uglier, or push to the duplication, which we saw, which is around 102.50 on slightly higher, and then attack this short. Okay, or we are going for a ugly range, which means because we had these legs and they are pretty equal, what might happen now is something like that. Okay, to make it longer, like for one more day, and then boom, correction to begin. After these corrections, according to the weekly cycle and daily cycle, we might be looking for a buy, but as for now in the short term, we might be looking for sell. So from here, and if it continues higher, then we are going for 102.50-ish, maybe slightly higher. Going to look for shorts here. That could take us for 100, up to 150 or even 200 pips down. And then we are going to attack again. That's the plan here. New Zealandian dollar. Still no momentum despite the great news we've had last week, which brings me back to this idea. So if we can get to this area, it could be very nice to go for buys. Or translated to the language of cycles, we have this cycle, which is the range. Get it down again here, back to the, okay, closer to the bottom of the triangle, and fly. That could be anything below 069.90 down to 069.40-ish. And look for the buy opportunities right there. Everything would remain relevant as long as the daily triangle really holds. If it doesn't hold, that means it will be the triangle before the final push down. It would take us towards 067.50, 067-ish before anything different comes in. Aussie dollar, same story. I was looking and still do for one more possible push lower on this pair, which could take us through 074.50 down to 074. Maybe even by ideal we are lucky to get it around 172 once again and then fly. But, and here comes the but, I am only after buys here, so what I want to see is push as lower as possible and then go for buys. Currently we have falls back on the bottom, falls back on the top, which means we're still dancing on a short-term range. And according to the short-term range, the situation is very simple. If we come closer again to this area on a short term, we might be looking to go for buys before sells again. The lower we go, the better, of course, and according to the zones. Okay, we are now on the bearish channel, which gives us all the reasons to look for the sell. We're on the top of the range, which gives us all the reasons to look for possible sells. We are holding the sell actions on the 4-hour and 1-hour chart. Only problem is the gap, of course. If it does continue to hold during the week, we might be looking for sells. How? Basically the same idea. If it does hold in place here and give us 2 waves correction and then give us the chance to break, there is a very good chance we are going to continue to dance lower. That's for this pair. S&P, well, holding the range. For me it still sells, but it's time to play safer. There is a very good chance, according to Trump and the happiness of the market, that Macron seems to be winning over Le Pen, which means Eurozone is probably not going through one more adventure or some crazy changes. Okay, in other words, that means short-term relaxing period, okay, or less of headache. So there is a good chance S&P going for one more final high, but there's a very good chance this range is going to hold, break, and continue further down. According to weekly cycle, while the top holds, we are only after sales, and this is why I'm looking to go short if we manage to break this double cycle down. We are on top of this range, which means it becomes very good for possible sells. And this is how we have to treat it. Okay? Of course, that's relevant for all the indices. The S&P is just the chosen one. Aussie versus the franc. It's this pair. I'm looking for heavy buys for the long term, but there is a chance that we are still dancing here on some kind of triple cycle here or channel. By ideal, we get something like that and we fly. But let's talk about the daily chart. So what we have here is this cycle, which is holding the duplication still, and we got this cycle which holds the 61.8 of this area. Okay, same zone, and even here, doesn't matter how you measure. Breaking through that would lead us towards 0.74, where I believe the buys could be really amazing from, but currently it's holding here. So, in other words, if it does hold the bottom and provide us this kind of opportunity with 2 waves down and then a breakout, that could be time to collect the buys. According to weekly and monthly cycles, we need to buy as low as possible. Currently, this is the low we got, which means we might be trying to get it there. According to Crystal Ball, we do have a bearish channel, which means our buy should be limited here. So if we really drop a bit lower, then it will be amazing time to start to push. But on the same time, we can see that that was the average distance we got below the channels before it came inside and continued, right? That was 1, right? That was 2, and that was 3. Sorry, here, and then here. They all are pretty much equal. Here as well. That's the one we got from here to here, right? The distances from here to here and now from here to here. They are equal, so we might get it like this. Anyway, the lower we get it, the better it is, and we should be looking for buys according to the weekly and monthly cycle. Currently, we hold the bottom, so if we get the 2 waves down on the lower time frames and we break, we might be trying the buys. Very tiny risk, very huge reward, because if it flies much higher. And according to the levels to hold, we don't really have one on the 4-hour chart, but on the 1-hour chart we do. And if it breaks and holds it, that could be a very nice opportunity. So that's the plan we would follow. Okay, if it managed to do that. If not, we go lower and we go for the next one, which should be below 74.50. That's for the Aussie franc. Now let's go over the oil, which, where it disappeared. Let's make it show all. Oil disappeared from my chart for some reason. Okay, here we go. Oil so far holding it, well, pretty impressive. This is a June contract, which we currently see. Now the biggest question is what's coming next, and as you know, I am only after buys for the oil, only after buys, but there is a chance that we will still get it lower. So for those of you who are short, okay, let's say it this way around, for those of you who are short, what I would do is just to protect and give it a chance, cash out partial and give it a chance to go. If it does, we might get going for something like that. If it doesn't, then at least you cash out partial and you don't lose money. For those of you who are not inside, I would be trading carefully here, and on a short term I would be trying to look for possible buys from around, let's say 48, 47 for some kind of a bounce. There is very good chance that a triangle here just started, so it might do something like that. There is a good chance for it. I don't claim it to happen, but as I say, there's a very good reliable chance for that. And if it is, then according to the divergences we start to see here, we have low 1, low 2, we might get low 3 and low 4, and then some serious reversal here according to the possible triangle to form. So again, those of you who are in, cash out partial, be happy, smile, and count your money back to the all the way to the bank. Those of you who are not in, play it safer. There is nothing wrong with being safer. Okay, remember that. It's not about being right, it's about making the money. And that's basically what I always say, and you have to remember. So that would be all for this week. Tread carefully, guys. I was looking for something clear. I will be honest with you. I was looking for some clearer setups, but as you can see, France elections and the announcement from Donald Trump really shake the market. So it's pretty hard to read through the gaps on the beginning of the week. So I will keep you updated, of course, on a daily basis starting from Tuesday with daily videos, right? But basically, we have to be careful here. That's what the market is saying, and we have to wait for the right setups. Remember, no one beside you is pushing you to trade every single day. It's only you and in your mind. Okay, the biggest traders, they don't trade every single day, not even every single week. They are waiting for the best opportunities. So remember that. Okay, it's only our human nature that is pushing us to trade and to trade and to trade and to trade. No, wait for the best opportunities. That's the easiest possible way to become profitable on the setups you choose. Okay, that's all. And that's all. What I say, respect the market if you want it to respect it back, and let's follow the setups and see where the market takes us to. So I will see you with the further updates during the weekly, during the daily forecast, of course. And I would suggest, guys, on the setups we just spoke about, follow the lines you get on the crystal ball, because it gives you the great combinations of the right period on terms of days to attack and the levels to attack from, which is really good and could be very beneficial to make the right decision. Thank you for your time watching the video. I wish you a wonderful trading week, and if you have any feedback or any question, write it down in the comments, please, and I will reply as soon as possible to all of your questions about any of the setups, or just leave your feedback. It's always great to hear, of course, what you have to say about the video. Thank you for your time watching this video, guys, and I hope it is helpful for you. Yours, Vladimir Ribakov.